This is James Hirechek with this week's Autochartist Forex weekly market recap for the week ending November 9th. Two charts that we're going to look at in this video are the Australian dollar US dollar and the US dollar Japanese yen, because they really tell the story of what's going on in the marketplace. You can see that when we had this rally here in the Australian dollar, it's just primarily a risk-on situation. It's when investors look for movement in higher yielding assets. So they demand risk and they demand higher yielding assets. And this took place between early October and basically the US election. And now that the election results are in and the administration has retained its prominence, in other words, President Obama has been re-elected, you can see that traders are expecting some uncertainty in the U.S. markets because of the fiscal cliff, and that's a conflict between the one party that wants to raise taxes and another party that wants to cut taxes. Also, there's a conflict between government spending, and this is creating uncertainty in the marketplace, and that's the reason why we're looking at pressure in the Australian dollar, or symbol AUD-USD, because traders want to shed some risk at this time. They don't know what the new administration is going to bring, and they don't know what the next 2 months are going to bring in terms of this fiscal cliff. So as long as there's uncertainty and there's risk in the marketplace, we could see this Australian dollar, US dollar continue lower, may possibly drop as low as the 101.16 area based on this chart pattern, but it's likely to retrace about halfway to about the 102.76 area, 102.96 area, where we could see some support. So right now we're in a risk-off scenario. Traders are selling commodities and equities around the world, especially U.S. traders, and they're position squaring, and that's putting pressure on the higher yielding Australian dollar. Also now, if we look at the Japanese yen, the US dollar Japanese yen, we see a sell-off taking place here. And with the US government basically at a 0% interest rates, and the Japanese central banks also calling for low interest rates, you see that these two markets are competing for the safety, or for lower yielding demand. And so when we see the US dollar sell off against the Japanese yen, that's another sign that traders are getting their money out of the risky assets and putting it into the lower risk or lower yielding Japanese yen. And so this chart pattern also demonstrates what's going on in the marketplace. Now, if there is a sudden shift or clarity hits the market, or the US reaches a compromise in terms of the fiscal cliff, you're likely to see the US dollar gain strength against the Japanese yen, and this will turn around once again. Also, getting back to the Australian dollar, if the risk is put back on, then this market's going to turn around also. So as long as we have this market beginning to trend down, it's a risk-off scenario, and you should see the Australian dollar fall against the US dollar, and you could see the US dollar also fall against the Japanese yen. So risk off means less demand for higher yielding assets and equities and commodities, and Forex markets, risk on means greater demand for higher yielding currencies, commodities, and stocks. This has been James Hirechek with this week's Autochartist weekly update for the week ending November 9th.